Alright, what's going on, traders? Today I'm going to do a little lesson on how to get around the PDT rule. What is it? Are you sick of the PDT rule? I'm going to go about this a little different way. I want to show you some things here, right? So we're going to start off with PTI, okay? We're going to start off talking margin account under the PDT rule. You have less than 25,000 or even really 30,000 to be realistic, right? Even 26,000, you're over the PDT rule, but you're on such a tight leash. Psychologically, it's maddening. I mean, I wouldn't recommend under 30,000. It's just tough, right? No matter what. So 30,000 in your account to be with a margin account to be able to just trade whatever you want. Something like this is fine, right? No problem. But you have the PDT rule if you're under 25,000, right? You get 3 trades a week. That's it, rolling trades if you do them in the day trade, and then you have to go 5 days before you can have another one. It's just ridiculous. The dumbest rule ever, right? And so there's so much psychologically behind that, and I know you guys have been there. I was there. I've checked it out. It's so frustrating, right? It's just you can't trade. It's impossible to trade. You get to see all of these professional traders. I don't care what room you're in. If you're in a good room, you've got good professional traders. They're recycling shares. They're working a core. They're selling pops, or they're shorting pops and covering the bottoms, shorting pops, covering the bottoms, getting full size. Oh, this is my A setup. I can load the boat now. If you're under the PDT rule, you can't participate in any of that. Nothing. You are completely on the sidelines. You get one trade. You get one shot. If you use all 3 shots in one day, that's it. You're done trading for the rest of the week, right? It's impossible to get around, okay? So I get it. If you have a margin account and you're over 30,000 and you're trading in a small cap room, great. I get it. It's good stuff. There's lots of money that can be made on this, okay? But I'm going to show you a different perspective. So how do you get around the PDT rule? Okay, well, the PDT rule does not apply to cash accounts. I don't know if you know this, but if you have a cash account, the PDT rule does not apply. You can take as many entries and exits as you want. You can trade as much as you want. It absolutely does not apply. Okay, it's just like a margin account, except your funds settle T+2 with stocks, right? So let's just look at this from a cash perspective, okay? So if you have a cash account, you could get, let's say you have even a $20,000 cash account, okay? So, I mean, you could trade 100 shares of this. You're in at $200, right? So $200 here. And you could work a core, right? You could do this all day long if you had a $20,000 account. Okay, let's say you have a $2,000 account. All right, you could get in here, $200, right? $250 if you got in here, 100 shares, $200. You could sell a pop, and you could add that back, right? So you sell 50 shares and add 50 back, and sell 50 shares and add 50 back, and you could actually trade like a trader. I mean, you're going to run out of cash eventually. Each time you're spending, 50 shares of this is even $200, right? So a $2,000 account, somewhere in this range, you're probably going to be to where you can't participate anymore. You'll be out of cash. But by then you've made, I don't know, your last sell was $600. You could have made some good money on this, right? So that's one way to look at this. It's a cash account, okay? But we all know how these small caps trade, right? How many of them look like this? Well, I don't know. Let's look at some of the runners this week, all right? And I know, I've been in all these rooms, and I know most of the stuff. I mean, you've got some great traders in some great rooms, right? Some people go long, some go short, some do both, man. You've got some great places. So don't get me wrong, this is not bagging on anything. I'm just trying to give you a different perspective. Is CNET, like for instance, on this, right? There's an opportunity to catch the long side, but we all know how difficult the long side is, right? But let's just say you did, kind of the same way. Look at the price range here. So you've got, even if you have a $2,000 account and you trade, okay, let's just say you get 1,000 shares, you put 50% of your account in there, and you get a chance to sell one and buy one, and that's it, you're done, right? But if something goes south, you're risking a big chunk of your account, right? So look at it from the 100 share perspective, right? $150 or even 200 shares, $300 trade, and you're actually able to ride it for some of this, or try to work a core, or any of that's right. But the good money on most of these is on the short side, right? So cash accounts only allow you to go long. You can't borrow. You can't get borrows on a cash account, right? So you just can't short. That right off the bat, cash account cuts you in half, right? So is cash account really an option trading small caps? I mean, not if you want to short. It's absolutely not an option at all. But if you want to play the long side, it's an option. If you want to try to catch the long side, it's definitely an option. But you can't play the short side, right? So here's NBEV, right? So if you did catch some of this, was there opportunity? Absolutely. And look at what you got from Was a $6 stock here in these last week, you know, the way it moved in the last week, right? It's a $6 stock. If you caught some of this move with a $2,000 account, you get 600 shares. You could get one sell and one ad, maybe, and you could capture what a $3 move, 300, 400 bucks. You know, it's possible on the long side. Okay, so, but you can't play this side. You're done. A couple more. C-Ron. Let's look at C-Ron. This is one of them that it's like, you know, these are some that are really hard to get on the long side because you know they're going to at some point they're going to dilute, or at least the ones that have dilution. I can't speak to this one specifically. I don't know. Haven't done the homework on them, right? But if they have an offering or whatever and they've got dilution going on, you just don't. It's really tough to play the long side, and you don't want to be on that side normally. You just wait for the short, right? That's the safe play. So it kind of takes you out of a lot of these that have warrants and things. You're really tough to play the long side. Possible, but tough, right? AVXL. Here's another one. But even on this, even on this on the long side, you know, a $2,000 account, you still have to have even for 100 shares, right? Now you got to have $1,000 just to play 100 shares on this, right? So it's possible. Yeah, still with a cash account, $2,000 is possible. Here, let's maybe look at one more here. AVXL is another runner, you know, and now look, trying to catch the long side of this, how difficult that is, right? It's really next to impossible most of the time. We have a really hot market now, so I have some pretty good examples to show you, but we all know that there's times that go by that everything's a short, right? And short sellers get really confident and it's easy money. Everything gets stuffed. Everything that's pops gets stuffed, right? And so here's a good example of that. You know, and then then let's look at this one. And then you get on like this one here. Plag. Okay, so you were to get in here with 100 shares, 200 shares, and you know, maybe even take a couple of ads, a cash account. You could be in your whole $2,000 account here, boom, and then it's halted. So all you can do is play the long side. You can't play the short side because you have a cash account. Your funds don't come back and they don't settle for T+2, right? So every other day you get your funds back, right? So even if you're trading a cash account on large caps, and then you don't get your money till every other day. Okay, so it still puts you basically 3 days a week at best that you can trade full cash, right? It's 3 days a week at best on small caps with a cash account. And then you get like this, boom, plag. It goes in and it halts. I mean, I forget the last one that we had that halted and it took 3 months to come out. And you know how these are. Once they come out of like what is it, T12 on this one, I think. Once it comes out of the halt situation, sometimes it doesn't even come out here. It comes out on OTC. And I mean, they basically go to zero or they go to really dirt cheap. And if you're lucky, when it goes to OTC, it'll get a bounce and you can get out for a partial loss. Most of the time it's a full loss, right? So just one, you're taking a chance. I mean, even if you're trading a core and you're actually taking profits and getting out, there's a possibility that you're in here with 25% or 10% of your account. Great, right? But you're still taking huge risk of halt, right? Over and over again, penny stocks get halted and you're done. Even if you were in short, you get halted. It's horrible. And then they tie up your capital, right? So those are your options on the penny stock. Definitely doable, but not easy, very difficult. And if you're under the PDT rule, it's just impossible to trade a cash account. You still only get 3 days a week and you can't short. And who the heck wants to trade penny stocks if they can't short, right? It's just ridiculous. Okay, so I want to show you another way. So let's look at a couple of things, right? Let's look at this. You look at like some of the things that I talk about in my daily recaps. You look at NVIDIA and you look at the price on this and you're like, he's out of his mind. I can't trade that. I can't even buy one share of that, right? I have a $2,000 account. And even if I did, I couldn't make any money on it. It just doesn't have the range, right? Okay, fair enough. Netflix, I didn't even talk about Netflix in this video, but this is the $1 million ticker, right? And I'm not even going to really discuss the options in this, right? I'm just going to show you some other stuff. SQ, this has really cheap options. Okay, and you still look at this and you're like, dang, I can't play that. Yeah, you can. Watch, let me show you. Okay, and I'll show you the difference. Amazon, look at this. You're like, there's no way I can touch this. Okay, so let me show you something. Now, options on a cash account. How do they do it? So options fund the money settles overnight. T+1 on options, okay? So every single trade you take, just like I explained with small caps, you can trade till you run out of cash, and then it funds overnight. You have the cash is available the next day. Okay, so one of the big advantages already over stocks is that you can trade all 5 days of the week and not 3 days a week. Okay, that's the first thing. The next thing is, so let's start with something simple. I'm going to show you a couple of options contracts that we've traded in the room over the next few weeks. Okay, so here's a good example of SQ. Okay, so I've been trading SQ for the last couple of weeks. and the 70 puts. Now you see these 70 puts don't move every day. No, this is the day that I traded them when I caught the break of 92. I started in here and I caught a little piece of it. This was like, and then when it finally broke 92, it ripped. Okay, so now let's put this into perspective. Let's say now we're trading options only. This is the contract of the option. First thing you need to understand is well, I'll explain that to you later. First thing you need to understand is like it's times 100. Okay, so if you see a 50-cent contract, that's going to cost you $50, right? Because it's 100 shares. You're buying 100 shares. So one contract is 50 cents, right? But you're buying 100 shares, so it's $50. So you take a look at this. This is $50, okay? So let's just say you want a $100 risk per trade. You have a $2,000 account, $100 risk per trade. You can buy 2 contracts right here. You get the pop, you sell one, you come and buy it back. You get the pop, you sell one, it hits support, you buy it back. Stop, break even, it stops you out. It breaks out again, you get one, buy it back. This is how you can trade with cash account, okay? You can trade until you run out of cash. So this whole day right here, you made $300-400 off of a $100 trade, and you never risked more than $100. If SQ absolutely ripped to $200 a share, it is impossible for you to lose more than $100. Okay? Never get dumped on again. Never get short. You get short a penny stock and it rips your face off, blows up your account. You can't do that in options. You never lose more than you buy, okay? So your days of blowing up your account are over unless you want to jump in with your whole account here, okay? But I'm going to show you how, and I teach how that you can do it without blowing up your account. So this very same stock, what I like to do is when I'm in for the bigger move, I'll sell one, buy one, sell one, buy one, and then I'm selling and I'm holding one into tomorrow. So no matter what, I'm adding to a winner. So tomorrow morning you get up, all the money you made, let's say you made $300, your bank account opens, your trading account opens with $2,300 in it the next day, okay? You get in, and here, now all of a sudden I still have one contract, you know, that I purchased. Now my average is probably somewhere around 70 cents or something like that after adding and selling, right? So I have one contract for somewhere around 75 cents. I wake up and it's worth $200, okay? So I have a $75 contract that's worth $200. So immediately I can add, and that puts my average around here, right? Around 125. You see that average? Did it ever get in harm's way all day long? No. Right? And here's the day it had the move. So I got 2 contracts with $125. I got a $250 investment here, and it rips. Even if you just hold till the right time of day, it ripped to $650. This is $1,200, $1,300, okay? $1,300. I just turned $250 into $1,300, right? That's what happened right here. This is how this is done. Or I trade a minimum of 20 contracts. I'll get in with a dollar and I trade 20 contracts, and now this becomes, you know, it's $1,000, $2,000 for every buck, right? Now this becomes a $12,000 trade for me, okay? And I risked $2,000. That's it. That's my max risk. If Square rips to the moon, I lost $2,000. No more, ever, okay? That's just one example. Let's look at another one. This is SQ on the long side. All right, here's SQ on the long side, okay? Now these are a little bit pricier contract, and I just wanted to show you, I did trade these 80s. They're a little bit pricier. Not everybody could trade them at this price, but this isn't just one strike, okay? I'm not even showing you multiple strikes. There is multiple strikes to look at. During this move right here, the 75s were probably $4. You know, the 65s were down at the other way around. The 85s were here. The 65s were here. They were dirt cheap, right? This is just one contract. So I'm just trying to show you that there is no, I don't have to get borrows, okay? You can have a cash account and you don't have to ask for borrows. You don't have to locate borrows, okay? You buy puts. You get long puts to go short, okay? You get long calls to go long, right? So here's the long side, boom. We're talking $4, $5, $6 to 20, okay? This is just one example. So this was SQ on the long side. Then after it cracked 92, this is what they did, right? This is what you want to be in, is the opposite side. So I played the calls on the way up and I grabbed the puts on the way back down. Okay, here's the puts on the way down. One strike. This is just one strike on the way down. I played 3 different strikes on this. Hold on. Sorry. All right, I played 3 different strikes, but I'm going to show you one. And I think this is the one that I want to show you here. Yes, P78. Okay, so here's the example. So you see how you look at this and you look at this chart and you're a stock trader, right? You've been trained to look at charts and you go, oh, that's illiquid. That is an illiquid piece of crap. I can't trade that, okay? I want to show you something about options. Okay, options are not like that. Options are completely different. This is all that matters on options. You can look at a chart that has 3 prints, It has nothing to do with liquidity. Nothing. Okay? Here you go. These are those same illiquid looking piece of crap. And right here, there's 121 contracts sitting on the bid. All right? There's 10 on the offer. I can buy 10 right now for $4. Now, I mean, it's off hours, but, and look, the spread is nothing. I mean, yes, there's a spread here, right? There is, but I'm just saying, in the middle of the day, during certain times, you can get a tight spread just like you do on stocks. You can get a wide spread just like you do on stocks. But as you can see right here at the close, there's 121. Now, in the middle of the day when things are moving, this chart right here looks like it's an illiquid piece of crap, but I can sit here and trade 100 contracts back and forth all day long. Okay? It's not illiquid. And what you're doing with a small account is trading 1 or 2 contracts. They're all like, there's no such thing as illiquid. You can get huge spreads like TLRY. The spreads were incredibly wide. Like you couldn't even trade that. You had to use a limit order. You had to set your order in the right spot, right? So I just want to explain that to you. Now the 73 puts, I don't even have them up here. The 73 puts were really liquid and they ripped like no other. Made bank on those and they were nice and liquid. So, but what I'm just going to keep on kind of going down the list. One more here because I want to kind of show you. Right? I want you to understand that if you are under $25,000 in your account, you don't have to suffer through the PDT anymore. I promise you. Just let me finish watching this video till the end. All right. So here's the NVIDIA puts that we played all week long. These 240s. This are the ones that the one I went over in my daily recap video. This is the move that it made all the way to 12. I sold here. I day traded them here. I just want to show you that it's not just one day. It's not when the market goes crazy. Yeah, when the market goes crazy, we get huge exponential moves, right? But every single day, we're talking hundreds to 200 to 300% gain every single day. And then when the market makes huge moves, we get exponential gains, okay? So you don't have to chase. You don't have to have scanners. You don't have to find all this stuff in the news. You don't have to dig in filings. And I'm not saying that that's not a good way to make money. It is. I made a lot of money shorting pigs, right? And I'm not saying that it's, and I'm not knocking it. I'm saying if you are stuck in the PDT BS government bullshit that we have to put up with, then don't do it anymore. Get a cash account, trade options, and let me show you some very, very good strategies to cap your risk but leave your gains exponentially open. This right here is a 50-cent contract, which means 70 cents, okay? Worst case, 100, okay? $100 per contract. 10 contracts is $1,000. 10 contracts for every buck, and you get $1,000, just like owning 1,000 shares of the stock, right? If you caught this from here to here, you know, that's a $6,000, $7,000 gain. And we all know that we don't ever catch the bulk of the run. I know. I can teach you how I like to work a core, and it has changed my trading like no other. It puts me up to where I can milk these things for all they're worth. But even if you just catch, you know, the bulk of the move, like everybody talks about, don't worry about top ticking, just get in it and get part of the move, half the move, partial move. There's still $6,000 to be made with a $1,000 risk. That's your max risk. That means if NVIDIA rips to the moon and goes to $1,000, you lost $1,000. You can't get stubborn anymore. I mean, you could add. You can do that, but I mean, I've got some really good strategies I can show you to just, it'll break you. It will break you of those stupid habits of adding to losers. But we don't do that with options. We don't ever add to options. You know why? Because we have multiple strikes. We have multiple strikes. Okay, this is just one strike. This is just one part of the option change. There's 230s, 235s, 240s, 245s, 250s. There's hundreds of these that look like this every day, and every one of them is like trading another ticker. But you're just watching one ticker. Okay? If you're in the position to where you're with PDT, check this out. Come visit me. Come visit the site. I got one more for you, all right? And then I'm gonna quit ranting. So here's Amazon. Okay, and you're like, oh my gosh, Amazon, I can't trade that. It's too expensive. It's just so pricey, right? Oh, well, let's see. Look, this was Amazon on Friday. I could pick this option up for one contract for $230. And it went all the way to what? It went to $30, right? One contract is $3,000. It went almost that high. One contract was $2,600, okay? So on Friday, because options are so cheap, and we trade Amazon a lot on Thursdays and Fridays because the options are cheap. You could do Mondays too, but they're a lot more expensive. So $2 to get in this. So one contract for 200 bucks a guy could have got. And let's just say we're not perfect traders. We don't ever bottom tick. We don't ever top tick. So we got in this one around, even say $3, and we got out in this first push at 2,000. So 300 bucks to 2,000. Okay. But now look at this. Now, if you really get in one of these and you're working a core and it happens to be the day that it does this, you get 1,000%, 1,600. I've had a 1,678% gain in one day. And then that was my first sell, okay? If you look at Netflix options after earnings, there's one of them that went 20,000%. I didn't catch that one, of course, but so my point is, and I hope that this is sinking in, is, and I haven't even talked about my baby Netflix, okay? If I go on about Netflix, we could go all day long of everything that I'm able to do with this, my pre-options strategies, then my post-options strategies, the short all the way back down, just there's so many things that you can do with options, long and short the trade, and you can do it with a $2,000 cash account. You can get one contract on both sides. If you just can't decide that morning, I don't know what this thing's going to do, let me teach you. I will show you how to get on both sides of the contract, and then I'm trading live. I'm talking through it, and I'm saying, let's be patient. Don't pull the trigger yet. Time of day's not here. I'm looking at the tape. I'm saying, this thing looks heavy. It looks heavy. Don't sell yourself short. Don't cover. Don't cover. Don't cover. So not only do you get my strategies, but you get my live commentary and my experience to where I can say, look, this is what I see, right? You get to hear it on the mic. You don't have to watch a chat. You get to sit here and watch my trade screen while I share my screens, where the price action is, what I'm seeing in the tape, what I'm seeing here, what I'm seeing versus this. Are they propping the bid? Are they stuffing it? Am I seeing iceberg orders? Am I seeing block orders? This is what I do. I sit here and I'm in a put and I'm watching this stock and I'm saying, check out this tape. It looks so heavy. It looks like it's going to crack. I'm saying right here, look at this pop. It's just covers. It's covers. I don't see any signs of strength. If it can't get over this, it's just going to stuff again. This is a good place to add. So you cover your puts and add. This is a good place to get in full size. Put your stop break even afterwards. Okay, that's what I do. The whole time I'm here trading, that's what I do. That's how I talk. That's what it's like to be in my room. We've got some other ones. Let's look at CGC. Here's something else that CGC just can't get over the 60, right? It just can't get over the 60. It's got some fairly liquid options, right? It's got some fairly liquid options. Let's just take a look at CGC. This is, I haven't really watched it trade, so I'm not going to really recommend this, but I do see this bid is stacking and stacking. They're really, there's a lot of money propping this up, trying to get it through 60, but it just can't get through 60. So a small put position, maybe on a 55 right here, and get short here at the 60. So far, it's really struggling with it. It may pull back into here for the bounce, maybe back into 200 for some calls. I don't know. Watching whole dollars is what I'd be watching. 58, 57, down to 55. Down to the 200 MA. But any pops at the open to 60 to get some puts, and if it breaks 60 to get some calls, and then with confirmation to get some calls, and then otherwise I'd hang on to these puts, get some kind of washout and see where we end up settling, and setting up maybe a higher low and maybe get some calls down there or calls over 60. I really like this CGC. That's some serious action, but I think we might have missed not getting involved here. We missed the $10 move, so we might have maybe a $5 pullback here. We went from 50 to 60. I'd love to see it pull back maybe to 55 right here. That would be so sweet. A 50% retracement, something like that, or at least to the 200 MA to get some calls. So I really like this. I'm going to have it up on a chart here that I can really keep a close eye on it.